Welcome to Premium Cash Flow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome to another edition of Premium Cash Flow Podcast. Today, I have the pleasure of welcoming Gary Lipsky to our podcast. Welcome to the show, Gary.
Thanks for having me, Sakar. I'm excited to be here.
Awesome. Gary is with APT Capital. Their group does lots of deals in Tucson, Phoenix submarkets, and he's currently into several deals, and their asset value currently is at 17 million. Their mission is to improve lives of tenants and the communities around them. Gary focuses a lot on improving the asset management quality and reporting for the investors. Gary has been an entrepreneur throughout his life. He's done several companies successfully and has also started a nonprofit. So quite a versatile career, Gary. So would appreciate, just share some background in terms of, how you got started and how you came to the syndication business.
Yeah, you said I've been out here my whole life, so I've always been good with numbers and taking action. And I've been investing in real estate, since 2002. I bought a house, and so I got used to like looking at something and knowing, I could, for 25,000 or 50,000, I could improve this and make it worth so much. And we kind of leapfrogged, improved our houses as long. And so that gave me some good experience on numbers. Sure. And how to do it and work with contractors. And I had sold the business at the end of 2016 and got into real estate full time. And that's what I wanted to do. I had a real estate, and I liked their lifestyle. I liked the creative side of real estate and business side. And multifamily really spoke to me because I was able to use my experience of running businesses. It's like running a franchise. So I invested in other people's deals. I immersed myself and educated myself as much as possible. And I, attend and read as much as I can, because there's stuff I can learn. And sure. And that set me up. And I took the first step we bought a small multifamily property, a 42 unit. That was a $1.7 million purchase. And then within 6 months later, we bought a building that's a little over 15 million with 128 units. So
wow,
you can scale quickly, and it's just applying, the things that I've done in the past.
Sure. Makes sense. Makes complete sense. So Gary, how did your first deal came about in terms of how did you find it? And perhaps I'd sometimes like to go back as well as to, what different things you did in terms of, let's say, checking on different areas or submarkets, as we like to call it. Give us some take on how you go about all of that.
Yeah. Obviously, for Kyle and I, we focus on, for the most part, we want to be experts in those markets and not be, a shotgun approach where we're looking at all different markets. Sure. You can't be of what's going on there. I read Phoenix Business Journal every single day. In those two markets, what we saw was tremendous job growth, tremendous population growth, tremendous rent growth. So these are the things that feed when you buy a multifamily property. And you want to, they're on Phoenix. They're building but still, they're not building as much as the population growth. So they're underbuilt. So we know it's a market. So we're going to pay a premium for that. But we're going to have maximum occupancy for the most part, which is great. That when COVID hits or not, that there's still plenty of rent action. We're still renting units up.
Sure.
During these times.
Awesome.
Building broker relationships is so important. In the beginning, you don't have anything to go by, but if the brokers are seeing you being diligent and going out there and talking about what you liked about a property, what you didn't, you'll build some trust, and
Sure.
after you get your first deal, it becomes a heck of a lot easier.
Sure. Now, Gary, this is where I think a lot of things we need to maybe perhaps focus upon is like building the broker relations, right? Give us some idea about how did you find the brokers? What sort of activities you did to kind of build that rapport and kind of build that trust factor and kind of give them the certainty that yes, you are a closer and they should definitely look forward to giving you deals and kind of understand what your group is specifically looking for.
I started building the broker list off of LoopNet. I saw, who was doing a lot of deals in the units that I was looking for and the types of units. Then we started expanding that list and reaching out to a lot of different brokers. Then, when you're going out there and you could talk a decent game about, what you're looking for and know intelligently, and communicate that to the broker, then they'll start building some trust, and
Sure.
Obviously I tell them a little bit about my background of being a successful business person. But, obviously in the beginning, there is a learning curve and that's okay. Anything you do, you're not going to be perfect from the beginning, but
Sure.
You be persistent and then you start building a rapport. There are certainly brokers I did not hit it off with, but other brokers I did, and you keep coming back and being diligent. And so we found this property because we were the first ones to look at it. We had a jump, we called the broker, hey, we're going out there, and this is Kyle and his wife found this one, and the broker's like, I just got the keys, if you're going to be here, let's check it out, and they did, and got a jump on the underwriting. And we were able to make an offer that they liked, and certainly they didn't fully trust us, as newbies. But you explain all the reasons why you're going to make a good buyer, and it's going to be as smooth as possible. And and we made a good buyer. We closed when we said we were going to close, and we did everything that we were supposed to do.
Sure. Now, in the broker world, Gary, we know that, you have the president, vice president, you have associate brokers and things like that. So what is your strategy? That are you going to perhaps like a VP level broker, or you guys start with like a associate broker who is more hungry and open on schedule to show you deals? How do you go about that?
Yeah, we didn't worry too much about title, but certainly, yeah, if you start with the associate brokers, that's a good way to start getting with them. It's like the secretary in the office, the doorkeeper, the gatekeeper. So good place to start, because you got to start somewhere. And certainly the president, the VP, the big dog is. Won't show you much time in the beginning, but once you close your first deal, like I said, then it starts opening up a lot more doors. Sure.
Now let's talk about your first deal. Like how many units, purchase price, what condition was it? Was it like a C deal, B class deal? Give us some details on that.
Yeah, it was a 42 unit, 39,000 a door. I mean, nice. I wish I could, buy like 10 of those, now.
Sure,
but
absolutely.
Yeah, can't find it. It looked like an old motel, not sexy at all. But those are the ones that interest us, the ones that don't look that good but have good bones, a good paint job, and then boom, you can raise the rents quite a bit, and that's what we did. We changed out the doors. They had sliders as front doors, which is ridiculous. Wow. So we changed out the doors. We did a paint job. Which was our big, rehab
Sure.
and that changed everything. We were able to push rents 40%, and most of the people actually ended up staying because they liked what we did, and the rents were well below market rent. So
Hmm.
they were very pleased and decided to stay. And we started doing interior renovations as well,
Hmm.
um, paint, um, some stainless steel appliances and whatnot, but not too much. Just a few $1,000s. The Tucson market doesn't require a really high end finish.
Hmm.
We're refinishing the countertops. Um, we do kind of like a pseudo backsplash with like this plastic stick on.
Hmm. Hmm.
So nothing too high end, and that's for our even our platinum edition. But yeah, it's been a home run from the beginning, and we actually have a couple offers right now to sell it. So we'll see if we could finalize um, price that we all agree on, then it'll be a home run for our investors in
Nice, nice.
a
Hmm.
little under a year and a half.
Wow, that's fast. Now, Gary, what was like the unit mix and perhaps the average rents, and what was the rent before and how much you were able to push up to?
Yeah, these were small units. It was half studios and half one by one, so real
Hmm.
small. And but there's a lot of need for that there,
Sure.
and the rents were really low. I believe. I mean, the studios were average about 400, and the one bedrooms were about 500. And we've pushed it without rubs, and so we've added rubs and we've pushed the rents. We keep pushing them, so I don't even remember where we're at, but I think we're at about 700 for the
Nice.
1+1s, and about 635, I believe, for the studio. So we've pushed it quite a bit.
Wow. Quite a bit. Wow, quite a bit.
We've been at or close to 100% um, occupancy, pre-leased,
Mhm.
continuously. So each
Sure.
time we hit it, we talk to our property management. Time to raise the rents.
That's always nice to hear. That's always nice to hear. Now, speaking of the value adds, I mean, you shared a lot of things about, the painting, all the different interior amenities and all that you did, right? How much was the budget? Like, how much did you spend per unit, per door, perhaps?
Yeah. So we budgeted a little over 300,000,
Mm-hmm.
and we've only spent half of that, quite honestly.
Mm-hmm.
Um, we just haven't had, some people have stayed in their unit, and we didn't upgrade their unit,
Mm-hmm.
and we just didn't need to do as much work as we thought. You always want to
Sure.
have that buffer.
Absolutely. Absolutely. Mm-hmm.
Yeah. So we had extra for roofing and HVAC, because certainly your reserves will not be able to cover it if you have a problem. So we over budgeted, and we always would rather be conservative. Um, and the units, I think it was from $2,000 to $3,000 range, depending upon how much
Sure.
you
What
did
you're doing. Right. 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 Makes
and
sense.
what size. But our maintenance guy was doing most of the turns, quite honestly. So that saves a good amount of money.
True, true, very true, very true. When you don't have to involve other subcontractors and you can get the work done through your normal folks is always a huge plus for sure. Now, Gary, how about your second deal came about? From what I understand, you were able to close the second deal as well in a rapid succession.
Yeah. So we found the next deal a couple weeks after we closed on this one.
Hmm.
One of the guys that partnered with us had done a deal with this broker before. He sent it
Hmm.
to him, but he has a full-time job. He didn't have time. So Kyle quickly underwrote it. It looked good. He texted me. He's like, "We're going to Phoenix tomorrow." So I said, "Sure, let's do it." So we left at I don't know, it was like probably 4 a.m. because we were there at 9 a.m. the next day before it was gonna go live to everyone else. So we liked what we saw. We walked all the comps. We adjusted our underwriting while we're driving back, and we made a preemptive offer so that we didn't get into a bidding war. When you get in a bidding war, you're typically, if you win, you've overpaid.
Sure, sure, sure.
Um, so we wanted to be aggressive and take it down without going there. And we got to an agreement with the seller. We turned in an LOI, and we went from there. But certainly there was a lot of hiccups along the way. It was not smooth sailing. The seller never gave his lawyer the LOI, so we got a contract that looked nothing like what we had agreed to. So,
Oh boy.
yeah. So we called the broker up and like, you've got to fix this. This is ridiculous. So, we didn't, we for a couple of times throughout the deal, we thought the deal was going to be dead, but we kept it alive, and we're very happy that we closed on it. It's gonna do very well. But
How many units, and what was the purchase price on that, Gary?
Yeah, 128 units. 72% are 2-bedroom, 1 bath, and then the other 28% are 1 bed, 1 bath.
Mm-hmm.
We paid about 118 a door. So the final purchase price was 15.15 million. So
Sure.
15,150,000.
I see. Now you went from a smaller deal to a much larger deal very quickly, Gary. How did you materialize the financing, the equity raise, and things like that? Was that something you had a lot of passive investors already lined up, or how did that you guys manage all that?
Yeah, we did have, as we were, building our own brand, and people liked what we were doing, and were more interested. We did have a much bigger capacity to raise money, but we also brought in some other partners that helped us not only with the capital raising, but other pieces, as far as one had a construction background, one had a background in marketing. So they did other things besides capital raise.
Sure.
And yeah, I mean, it's the power of team. We're able to pull our resources together and take down a much bigger property and get economies of scale.
Sure. Why not? And was that a B-class deal, C-class deal? How was it?
C-class property that we hope is going to turn into a B-class neighborhood. There's a B-class building that sold down the street for 173 a door a few months ago.
Wow.
So we love that because we paid 118.
Right.
Nicer building, but we do believe, and our property management believes, our neighborhood is turning into a B class. So maybe by the end of our business plan, it will be that. But we didn't underwrite that for that. We still underwrote for a C class conservatively. But yeah, if it turns into a B class, then this thing is a home run.
Nice. I mean, definitely from 118 to 173. I mean, there's a huge spread. And even if you don't get to 173, but if you can get as much closer, boy, that is a sweet deal. What about any value adds or anything in your second deal? How did you manage all that?
Yeah, so on this one, we're working on the interiors. We're going to do a paint job as well for the whole place, because we really believe the exterior is so important. The people aren't as focused as their interior as they are the exterior. It seems that way. So definitely working on that, adding some amenities. So there was a big playground set. So what we did is we kind of moved it over, added a dog park, added some more lighting throughout the building, and keeping the place clean, because it wasn't as clean as before. And yeah, and we're starting to get above pro forma rents, which is fantastic. We still have a ways to go on our renovations.
Sure.
But and we're actually adding washer dryers to 90 of the units.
Wow, that's a huge value add for sure.
Yeah, so you're talking a $50 to $75 rent bump per unit. So
absolutely, and probably just pays that off within 6 months. I mean, more or less, just the cost of washer dryers and stuff, basically. Awesome. Now, speaking of, sort of taking over the properties, Gary, are you keeping the same property management that was existing, or are you bringing in someone else? How are you managing that aspect?
Yeah, we brought in a new company. We hired the person that was already there. It didn't work out. We had a feeling it wasn't going to work out, but we wanted that consistency in the beginning. But again, we fire fast. It wasn't working out. Let's move on. We had the same property management company as our first property. We really like working with them. They have a very strong team. So if someone's sick or quits or whatnot, someone else is there to replace them. So we never have an open spot where,
Sure.
We're desperate for staffing, and things start
Right.
going downhill.
Right. Right.
Which is nice.
Right. Now, give us a sense, Gary, that what it takes to fire someone, meaning what trends are you seeing or what sort of inklings you're seeing, and then you say that, hey, we got to pull the plug and change this. Can you maybe give some ideas as to how did that went down?
Yeah, having run many businesses before, you have to make sure that you've given them every chance to succeed, making sure they understand your expectations and that you've given them feedback. And if they're still not hitting those marks, then it's time to let them go. But we weren't leasing as fast as we wanted to, and we knew based on the comps in the area that they were leasing faster than us. The paperwork just wasn't clean. We never could get when we got our weekly report, it just wasn't matching up right. And so we can't do our job if she's not doing her job correctly. So it was, she came from a small company where it was a little bit more less oversight. And we have a lot of oversight. We don't micromanage, but we want to make sure we get all the reports, trust but verify everything. And we weren't able to, so we just decided it was best to go in a different direction.
Sure. Now, that leads into a natural question there, Gary, is that what sort of metrics and KPIs you are tracking typically on a weekly basis, whether that's your asset management calls or your CapEx reporting, things like that?
Obviously, rent collection, bad debt, you're tracking as the month goes along. And that first 5 days is critical. You want, we were training people in the beginning to start paying on time, because in the past they were paying the third week, the fourth week, whatnot. We had to retrain them, and we're monitoring all that, making sure we're improving every month. We're also improving the whole leasing process between people when they call in and they're interested, to doing a tour, to submitting an application, to submitting an application, and to getting it leased up. And you want to track that, along the way, to make sure there's no bottlenecks. We thought for us, we had a lot of interest. Let's say 20 people a month were interested, but we're only converting one lease a month in the beginning, or one lease a week. And so we went through the whole list with our team and said, well, we need to keep converting more and more people along the way, so that we have 4 leases a month. So we talked about that process and how to improve it, and we've definitely gotten a lot more results that way as well.
I see. Now, definitely as part of leasing, you're obviously doing the advertising and, getting a lot of leads and things like that. How have you improved the advertising and marketing of the property?
Yeah, we have a couple of, ways that we do that. And just because it works in Tucson, doesn't work in Phoenix, doesn't work in Dallas. Every market is different.
Sure.
We test that to see what's working and what's not working. We'll also secret shop our properties on a consistent basis and say, hey, you didn't call back, or this, you sent a generic email and you need to personalize this. And we keep giving feedback so that we can improve the processes along the time. We want to make sure it's a quick call back, a quick email back, multiple ways that we're communicating with a potential tenant, because there's a very short window. And so you want to make sure that you grab them while you can before they find the next place.
Right. Completely agree. I mean, there's just so many options. Nowadays everybody's doing things mobile. I mean, it's either a click here or a click there, and you're either it's your property or your competitor's property for sure. So, now a couple of last questions, Gary. As seasoned as you are, and you have networked with a lot of folks now, give us, some of your best advice as to, what have you learned from others, or things that kind of keep you in check and in discipline, sort of on a daily basis?
Yeah, you have to keep a level head. There's going to be highs and lows always. So it's a long-term investment. Treat everyone with respect. Keep learning. I learn things from experts, and I learn things from beginners that are thinking outside the box or doing something different. So you never know when a great idea is going to come from, and be open to that. And it's not always about the bottom line. You have to, like I said, treat people with respect, and that includes tenants, and it'll pay back tenfold.
Couldn't agree more. I am myself, during the day, a property manager at times, and interacting with tenants, contractors, or either lenders and things like that. I think what goes around comes around. So couldn't agree more. So it's been wonderful, Gary. I appreciate you coming on. Please share with our listeners how they can find you and learn more about your company and everything.
Yeah, I'm on social media. Definitely reach out. I love talking real estate. My email is glipsky, Lipsky, at aptcapitalgroup.com. And you can check out information on our virtual asset management summit at amssummit2020.com.
Awesome. You are, and your group is doing wonderful things. So you are a man to follow. Thank you for coming on, Gary. Listeners of the podcast can also log on to premiumcashflow.com, where we have many articles and expert guests that come on the podcast. So there's always a room to learn. If you're interested to, learn about the opportunities or how to passively invest, we also have opportunities pretty much on a monthly basis nowadays. So you can log on and click on invest with us, and we can jump on a short phone call to understand what interests you have and what sort of markets you're looking to invest. So it's been wonderful, Gary. Thank you for coming on. I will look forward to hosting you on a future podcast to talk about some of the more deals that your group is doing.
Sounds good. Thanks for having me.
Thank you.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.